Just looking at the March survey of credit lending standards, there seems to have been a significant easing of credit standards in the household lending sector and an expectation of an even bigger easing of those lending standards. Are you concerned at all about increased amount of 90% plus lending or large numbers of multiples to income lending that's going on in household lending?
No. We are seeing an easing of credit conditions, and certainly in terms of lending on housing, we're not concerned about seeing over-enthusiastic lending by banks at the minute, but we'll keep monitoring that. That obviously also depends on what happens in the housing sector. We're seeing some increase in house sales. We're seeing some increase in activity generally there. We had expected that. That's broadly in line with our forecasts, and we think that's probably a good thing rather than a bad thing for New Zealand. But absolutely we'll keep looking at lending practices in that area.
In Australia, the parents of the big four banks here have acted not to pass on all of any cut in the official cash rate because they say their funding costs have increased. Would the banks be able to use the same reasoning not to pass on any change in the official cash rate here, given what you're saying about their profit levels and net interest margins in this report?
Well, Bernard, this isn't about monetary policy statement, of course, as you realise, but you did frame your question in a clever way. I don't know. How would you like to answer that?
Well, I would say that in New Zealand, the pricing of the banks, mortgage pricing and other lending pricing, has always been. It hasn't been in lockstep with official cash rate changes as it has been in the past in Australia. So always had these immediate shifts in Australia, and then when they started to go out of line, people were getting upset. Well, they've never been in line here, but mainly because one of the big factors is that a lot of the mortgages in New Zealand have been fixed rate mortgages rather than floating rate, so you haven't had this floating rate repricing being such a big deal. The pricing of the New Zealand banks goes off their cost of funds. An important driver of the cost of funds is the official cash rate, but there are other factors affecting it as well. And that's always been the case, and there's never been that sort of one-for-one mapping that you may have had in Australia.
But now that so many more people are on floating...
Sorry, just wait a second.
But now that so many more people are on floating rather than fixed, and your own figures show that the net interest margin has actually increased here, unlike in Australia, there would not seem to be room for them not to pass it on.
Oh, I mean, we're not trying to give signals to the banks here. We're expecting to be following competitive pressures in the industry. The demand for loans at the minute is not that strong. They're very aware of that, and they'd like to generally increase their lending, so they're under some pressure there.
Do you have any more news on Heartland and whether it might get a banking licence?
We won't, as you know, we'll never discuss individual institutions, Bernard.
Just looking at Basel III, you say you're putting some material on your website today. Have the banks been pushing back against whatever interpretations the Reserve Bank here has to the Basel III rules offshore?
Well, there's been quite a few submissions. We had a consultation document in November, then another one in March, and then the bank and other interested party submissions over the last few months. And, yeah, a lot of them had concerns about various aspects of it, in particular asking questions where we deviated or had a standard that was somewhat different from the Basel standard or different from APRA. And so we've reviewed the submissions and we've made a number of changes to the proposals, taking into account those submissions. So some sort of valid arguments that we've recognised, and I think the banks will be interested to see in the piece that we've put on the website that we're probably moving back to some of our proposals to be more in line with APRA, although there's some differences still.